Welcome to Passive Investors Playbook. I'm your host, Charlie Hardage. In each episode, we'll sit down with successful people that turn to real estate to build and grow their wealth. We do a deep dive into why they chose real estate and what makes it so attractive to them. We explore why people in their industry could also benefit from passively investing in real estate. Whether you're a beginner or an experienced investor, a doctor or a professional athlete, love your job or hate your job, our show is here to help you build a profitable real estate portfolio while maximizing your free time and minimizing stress. So sit back, relax, and get ready to learn from some of the best in the business. Welcome to Passive Investors Playbook.
My name is Marcus Ogden, the owner of Ogden Ventures, LLC, a speaking, coaching, consulting business that helps real estate investors rise and elevate to the next level. We are a proud sponsor of the Passive Investors Playbook, a show that helps individuals learn about real estate investing, knowledge to help them gain wealth in investing in real estate to grow their portfolio. To contact Ogden Ventures LLC, go to our website, www.marcus.ogden.com, or email us at marcus@marcusogden.com. Get in touch with us today. We'd love to speak with you. And again, we are a proud sponsor of the Passive Investors Playbook Show, a show that helps people understand and gain knowledge around real estate investing.
All right, we are back with another episode. My name is Charlie Hardage, and I'm the host of the Passive Investors Playbook. Today, I have a super special guest and Super Bowl legend, Brent Barcus. Brent is the owner and founder of I-65 Capital Investments. He is an immersive audio sound designer as well as a real estate investor based in Nashville, Tennessee. Over the last 30 years, Brent has been a performer on the world's biggest stages. He has been a session musician and audio mixer for global artists and brands. His clients include Shania Twain, Elton John, NASCAR, and more. He even played at the Super Bowl 37 halftime show on stage with Shania Twain in 2003. As a real estate investor, Brent has over 200 units and years of experience. He focuses on acquisitions and raising capital. He has a passion for creative real estate deals and is now focused on acquiring cash-flowing multifamily assets to produce generational wealth for his family and others in the sports and entertainment world. Brent, I'm super excited to have you on the show today. Thank you so much for being here.
Oh man, my honor. Thank you for having me. This is fun. I always love doing these. So
good.
So yeah.
Awesome. Yeah. Could you tell us a little bit more about yourself?
Absolutely. Yeah, I would love to. So the 2003, that makes me seem really old. So I am old. No. So my story goes way back on the music and entertainment side. I came to Nashville out of high school. I decided I wanted to pursue being a session musician, guitar player, touring performer, and so I was crazy enough to leave St. Louis, Missouri, and come drive to Nashville and give it a shot. And honestly, I did come to school. I came to a little school called Belmont University, which now is not little anymore. Yep. It was Belmont College at the time, and it was a great opportunity to play with just world-class musicians, learn from them, and get my feet wet and meet the right people to kind of get into that world. And so it was a kind of a risky move, but I guess it was, at that time, you don't have a lot to, you don't have a lot of overhead or people that you're responsible for at that time of your life. So it was a good play, I guess. At that point, I was 19, so you don't have a lot to lose. You can always move back home with mom and dad, right?
Sure.
So yeah, so it snowballed from there. I was in the dorms with some excellent musicians that ended up being kind of the next generation of, players that were on all the major records in country and pop and Christian, and then ended up, a lot of them were touring with major artists as well. And I just kind of ended up hearing about all the things that were going on and found my life here in the 90s in Nashville, playing on records and touring the world with artists. And that led to, really getting into more when computers kind of were, Macs were happening in the late 90s, everybody was getting into, every recording was becoming software based, and I got into production and moved to LA for a while and worked on, labels, worked with labels on custom, music and new songs and pitching to artists. And so I got into production, then got into film and TV out in LA, and kind of brought that back to Nashville when my wife and I decided to have a family, and got my own studio going here back in Nashville many years ago. And so I still work out of I have a studio here in my house, and
I
do
can tell.
a lot of film and TV, Dolby Atmos work, which is fun, immersive audio.
Okay.
Through all this, the thread has been real estate. It's been my love and passion. My dad is, I grew up with a dad that was a developer, investor, broker, commercial real estate tycoon, I guess you'd say, in the 80s. And I learned from him. I give him all the credit for, just teaching me, even if it wasn't intentionally, just by his life. My mother and him would go to events in California, and they did a lot of seminars, and always looking for the next kind of thing that was happening in real estate that they could maybe infiltrate into their careers in St. Louis and the Midwest. So I learned from him, and then just took that basically, and it's always been more residential kind of for many years, just doing flips, creative stuff, flips, short-term rentals. I did a few spec homes, and because I was traveling so much a lot, I'd always be looking at real estate, but never had enough time to really be in one spot to, do a lot of it in one location. So, but always doing creative projects. But in the last 5 years is really when I really have kind of buckled down to really learn multifamily, and thinking about, my family, long-term wealth, passive income, and then how can I then hopefully turn this knowledge and then pass that on, and to bring in other people that want to invest as well into these awesome assets. So that's kind of a huge lens, I guess, but that's my life.
Yeah, that's amazing. So, okay, you grew up in St. Louis when you were going to college, moved to Nashville, and I've been in Nashville for, 15 years or so, and I know the city's totally changed in the last 15 years. You were in Nashville before that. Nashville, what a lot of people don't realize is it was a tiny town. It had a big name, everyone had heard of it. Very small town.
Very small, and very, yeah. I mean, now, obviously you have all the growth in the different areas spreading out, and, Franklin, Brentwood, which is now kind of suburbs, I guess you'd say. It's a high growth south of town. I mean, they were like one stoplight type little towns,
Wow.
but a lot of that creativity, a lot of Nashville's, songwriters and things, that all that growth and those creative people started kind of, taking it all south, I guess. But obviously now it's all around. But yeah, it's pretty exciting to see how much it's changed. It was really a podunk, people thought of music is like, belt buckles and creased jeans, kind of was in the 90s,
Yeah. So you moved here, you moved to Nashville. You got in with some bands, did some touring, did some TV, some movies, all that fun stuff. What's really cool about you and some of the other guests I've spoken to actually don't have this background. So your dad, or your parents, specifically your dad, they were already in real estate. You mentioned developer, investor, broker, I think you said. Why did you maybe not want to go that route to begin with, and you wanted to pursue your own passion?
Great question. I think I always had a love for it. And I think I was so, as a high school kid, I was very into creative, into playing music. I was in bands and, playing at these dances in high school. And I think I was so passionate about performing and recording and just kind of mastering the instrument, I guess, if you will. It kind of just, sports didn't work out for me. I loved sports in middle school and played a little bit of high school sports, but then, I could tell that really wasn't going to be my thing. So I think I just gravitated towards the guitar and music and just fell in love with it. And I felt like, hey, if I practice hard at this, I feel like I could get really good at this and maybe, give it a shot. So I don't know. I think it always just, for me, I was like, hey, this is something that is highly risky to try, but it was worth trying. And I knew that real estate was always something it would be in my life throughout that time. But I just kind of always, I guess, put it on the back burner just because I was so busy on the creative side with touring and recording and all that. So, but it was always fun. It was something that I did with my wife. She's a realtor, she's a residential realtor. And so we've always kind of been in and out of it on the residential side with, like I said, flips and short terms and all that, which has been great for us. We've never really been traditional investors. We've always loved real estate as how we would, pay for things. And my dad even told me, I think my dad sold a piece of land to pay for my, from my rehearsal dinner. He was always he was just creative. He would find
Yeah.
ways. All his investments were in deals and assets, real estate assets. So he was always trading and borrowing and bartering. So he was just a great businessman in real estate. So I kind of, maybe it's in my blood, I guess, so.
That's awesome. So I know a lot of people getting into real estate, it's a huge risk, right? Because most people, myself included, grew up, middle class mindset, or hey, get a job and that's how you retire, right? Pinch pennies and retire that way. And your big risk, instead of getting into real estate, was getting away from real estate to say, hey, I want to go all out. I want to see if I can become a musician. And maybe you weren't even thinking about touring the world or playing at the Super Bowl or anything like that, but it was really just kind of get away from real estate, take a risk, and because you knew you had real estate to fall back on.
Yeah, and I think so. I think that I would say I don't have any regrets, but I wish I would have maybe during those creative periods of of early years of my work life, I would have been acquiring assets more.
Yeah.
And a whole time, that whole time, which we all talk about, is just that time. You need that time. And we were doing more creative. We liked demoing and flipping, and so we were doing short term to just help pay for fun things in our lives, or to put a little money aside. But we could, if we would have bought apartments back then, we would have I would have had a lot more freedom now. But that's okay. It's just, that's you live and learn, right? So
yeah, and I think there's a lot of learning experiences in there too. I think if you talk to almost every real estate investor, whether they've done this for a year or for 10 years, what's your biggest regret? Oh, I wish I started sooner.
yeah.
And I know for myself, obviously I wish I started sooner, but there's just so much I didn't know at that time. And, potentially I would have had such a huge failure that I said, oh, no, I'm getting out. And so I kind of see it as everything happens for a reason. There's a time and a place for everything. And so, yeah, I'm right along there with you, Brent, of I wish I started sooner, but there's probably a reason I didn't.
Exactly. Yeah, you're right. Total good point.
Yeah. But so, okay, you got into real estate because your dad was into real estate. And you've always kind of had that burning itch of, hey, real estate's there for me. You and your wife have done some different things in real estate. Why do you think real estate is so attractive to you? And maybe since your parents were in real estate before, maybe talk to one of your colleagues that is a session musician or in audio. Why would real estate be attractive to them?
Oh, good question. For me, it's there's a lot of things. I think there's a creative side to it, the hunt. There's always a hunt. You're always looking for the next great opportunity, great deal. So there's part of that taps into my creative juices, I guess. I think just owning real assets, something that you can touch and feel, and I've just never really been somebody that plays the market, the traditional investments. I've always been a kind of a 1099 income earner,
Okay.
and so I've always wanted to put money that I earn into things that I could touch and feel and maybe get involved in and increase value and make things, improve those things and have infinite returns, basically. That's the things that I get excited about, instead of just kind of like throwing my money to a advisor or into a market that's it's fluctuating all the time, and volatility of all that. So I just like real assets. I think it's a great opportunity, especially now as we see the craziness with the banks and the markets. I mean, it's just, I think, more and more opportunity now this year to get into things that are going to generate cash flow for years to come.
Yeah, I love that, because I think with real assets, you hear a lot of investors say, oh, it's a real tangible asset. But I think for me, what's more important of being a real tangible asset is the fact that if I invest in with a financial planner, I'm so far removed from actually being able to do anything with that mutual fund or that stock, meaning I say, yeah, I want to be a little aggressive. So the financial planner finds this mutual fund. Well, that mutual fund is ran by a fund manager.
Right.
And then those stocks are ran by, the C-suite of that company. And so I can't really do anything with that business, right? If it's failing, if it's struggling, the only thing I can say is, okay, pull my money out and go to a different company. Whereas with a real asset that you own, I can say, hey, Brent, this property's not doing well. what do we need to do, right? And we can actually go and make that change. We can say, oh, maybe we need a new property management company. Maybe we need to paint it. Maybe we need to put some marketing to it. And so not only is it a real asset where people can actually live, physically live, but there's stuff that we can actually do to directly impact the bottom line. And I think that's something for me that I absolutely love about real estate. And I know you and I both, we invest in, you've done some single family. For the most part, I'm out of single family. I still have one home remaining, but we're both in apartments. And the reason that we're in apartments and single family is because it provides a basic human need of shelter, right? And so for the most part, they're pretty resilient during a market downturn. Not always, but pretty resilient. And going back to the real assets, I think that is, investors will say, yeah, it's a real asset, but it's so much deeper than just being something that you can touch and feel. And so I that is one of my favorite benefits of real estate.
Yeah, and what you're talking about, which is so true, the value add element of these currently what we're in, the apartments, is just, it was a light bulb years ago researching and obviously single family being where it's appraised based on the other houses in the area or the street that you're on. I was always obviously dealing with that with flips and single family investments, and this, realizing that this business plan in a multifamily, complex with the net operating income and just how these assets are valued, and then the value add where you can push and force the appreciation. It was just incredible to think, wait, this is what's happening. I didn't really, when you start learning about it, it's so exciting because you're like, wow, you can actually work a business plan,
right?
Create value, and raise, when the rents obviously get raised, then the value goes up. It's pretty incredible.
It really is. And just for the listeners, what Brent's talking about is with a single family home, that's a residential property. And so you're based on the market comps, the neighborhood, and there's not too much you can do to improve the value. Sure, you can paint, you can do some renovations, but at the end of the day, that property is still in that neighborhood, and it's comparable to the other homes in that neighborhood. In apartments and commercial property, it's actually called, and Brent said it, net operating income, also called NOI, where it's all of the income from rent and fees minus operating expenses, and that's the NOI. And so, as Brent said, if you run it more like a business, you can actually improve the value even without raising rent, even without increasing the income, just by maybe reducing some of the expenses. Right. And for me as well, getting into multifamily syndication a few years ago, I was like, is this even fair? This is amazing, because it's not necessarily based off the market. It's not based off the neighborhood. It's also based off the net operating income, so the income and the expenses. So that's one of the huge benefits of what we do, where we go in there and we add value to the property, we force appreciation, and that's how we bring a nice return to our investors.
Yeah. And also, I want to make sure that our listeners, your listeners, know that. I always thought, oh, I can invest in a REIT. I can get into real estate. That must be assets. Well, come to find out, that's just paper assets.
Right.
What's cool about these syndications, which, what's been amazing, is to actually, you actually can passively invest in these syndications where you're actually you own a part of a piece of these real assets, which is, I think, super cool. It's an opportunity for everyone to get involved and get invested in these properties.
Yeah, and that's a good point. I think my very first deal I ever got into passively, I put in $50,000. I own less than 0.01% of it. And it was, if I remember, it was like 17 or 18 million dollar raise, and it was like a 50 or $60 million property. But I still got all the benefits, and I didn't have to do any of the work. So still got depreciation, still getting cash flow distributions. And then when the property sells in probably a year or two, get my money back plus a nice return. And it's totally passive for me. I've not seen the property. I read the emails every month. I talk to the sponsors if I do have any questions. But it's been 20 minutes a month maybe of work for me. It's been phenomenal.
Yeah.
Yeah, no, great.
Yeah, it's exciting to just I feel like sometimes like you're saying, people might think, oh, I got to do all the all the maintenance and things, and just letting people know about these passive investments is pretty powerful.
Yeah, I'd love to talk about that a little bit more, because I remember the first time I heard about this, the passive side of things, I didn't believe it, because I was like, again, I came from a single family world of, I'm doing the work. Even if there was a property management company, I'm still doing a lot of work, and getting the percentage return was decent, but the overall return was a couple $100 a month. And I remember hearing someone talk about multifamily syndications. I'm like, wait, I can put in the same amount of money, get a pretty similar return, and not do anything.
Yeah.
Like,
Yeah.
I don't get it. And so they explain, you have a team that finds the deals, kind of like what you were talking about. You like the hunt, you like the creative side of things. So you and your team would go find a property, get it tied up, get a contract under it. And then you would go and raise the money from people like me, passive investors that say, hey, Brent, I don't know what I'm doing, or I
Just
don't
too
have the
busy.
time.
Yeah.
You and your expert team, I'll invest with you guys, and then get distributions, get depreciation, get some nice returns. It's phenomenal.
Yeah. Pretty exciting. Yeah, love it.
Yeah, definitely.
Yeah.
Okay, so we've talked about why real estate's so attractive. Talked about how you got into real estate. Kind of want to circle back around a little bit. You've been so super successful just with from the musician side of things, from the audio engineer side of things. Ultimately, what is it about real estate? I know you had the background in there, but what is it about real estate maybe that said, okay, it is time to settle down? I know you have a family now, but why did you go back to real estate as opposed to something else?
Good question. Well, I think it's familiar just because obviously, as we talked about, it's kind of in my blood with my parents.
Yeah.
So I think it feels familiar from that standpoint. It's not a totally new, out of the blue type of career where I'm starting from scratch. So I feel
Sure.
like I know I'm familiar with some of the terms, and obviously how things work, and so I think that. But I think also just my stage where I'm at in life, you start to think about the last half of your life, and kids, and okay, what am I gonna, the responsibilities that I wasn't when I was pursuing the music and audio career full time in my 20s and 30s and traveling. I wasn't really thinking about, what I was leaving because I didn't have family yet, So
Right.
yeah, it's kind of a season where you start thinking about what do I want to invest my time in that is going to produce things that I can pass on to my kids and hopefully their children as well,
Yeah.
and how do I what's that structure? How do I set it up? And what are those investments that I can leave that can hopefully they can live off of and allow them to either use, provide them cash flow, but also maybe borrow against or use to start another company or start a business or do things to allow them to have an opportunity,
Yeah.
And so I think real estate just checked those boxes for me, even though I was totally already passionate about it. I wasn't starting from scratch, and I still love what I do. I still have my studio and do, great fun creative projects. And it gives me the opportunity to continue to build that, hopefully that legacy in real estate and do the creative projects I love to do in the studio. So it's kind of a great merger of two different careers, but they're both creative and fun. So anyway,
Yeah.
it seems to work for us. And my wife's, like I said, my wife's a residential realtor. So we're trying to kind of work together as well, because she'll have a lot of clients coming that want to move to Nashville from right now, California. As you know, there's a lot of migration. So, and it's a great opportunity for us because there's a lot of people that are looking for, besides buying, their own, moving and buying their home, they want to invest. So we're kind of trying to, help those people as well if they want to get into some longer term, cash flowing assets as well. So it's been good.
Yeah, that's amazing. I know what you said about kind of leaving a legacy. I love that, and that's one of the reasons I'm in real estate as well, because I don't care what my daughter wants to do, but I want to be able to provide these assets, these cash flowing assets, that she doesn't have to worry about money. So if she wants to go and do something, maybe it doesn't pay well, that's fine. She said, and so to me that's that's why real estate for me as well, is just kind of that lifelong legacy. And I would say, in a lot of other industries, Brent, I don't think that's necessarily possible, because if you have your own business, whatever that may be, maybe it's a franchise, maybe it's small business, whatever. The kids would have to then go and work full time in that business.
It becomes so labor intensive,
right? And maybe they don't want that. And
exactly.
They're like, nothing against what you do, but I don't want to do that. Whereas with real estate and what we do, we have teams, right? It's not like it's just you. It's not just you and your wife doing it. Right. It's a team of people. There's vendors, property management companies, and so to me, real estate's a no-brainer. And then it's up to them. My daughter, when does she want to sell? Does she want to sell? So I love your answer.
Oh, thanks. It's exciting. It's pretty, it's powerful. And it's exciting. It is like, it's a phase of life. You start, when you get to this age, you're thinking about what we're going to leave behind and how to leave it the best we can, Sure. So yeah. And real estate checks those boxes. So
it does. It really does.
Yeah.
I feel like I have a lot of boxes to check, and every few months I'm like, ooh, there's another box. Oh, real estate, already got it. Like the legacy wealth and all that. But all right. So what would you say your company goals? And I know you have your own audio company, but strictly real estate speaking, what are your company goals over the next few years?
Yeah, thanks. Let's see. Well, I have a company, I-65 Capital Investments.
Mm-hmm.
We are co-GP on 200 units in Georgia currently. And we are sourcing deals, still building relationships with brokers in the Southeast mainly. But the goal this year is to continue to capital raise, to bring more funds into deals. And then, I'd love to, the idea is to have 3 new multifamily deals under management in the next year and a half. So
awesome.
So to be a GP on 3 more deals and bring capital to the table as well. So that's kind of the idea right now. So I'd like to be in the 100 to 150 door size property.
Okay.
So.
Perfect. And I know we'll plug your website and social media handles later towards the end, but I know what I like about what you and your team do, Brent, is you guys are always raising capital, whether you have a deal or not, which I think is very important because you don't want to say, oh, we got a deal, kind of a quick close, and then you have to go out and figure out how to raise the money. And so, if anyone is if anyone is interested in investing with Brent and his team, we'll plug the social media handles and the website later, and please reach out to him. Brent's a great guy. We had coffee about a month or 2 ago. He likes to talk, and it'd be a good conversation.
Yeah, I'd love to. Please reach out.
All right. So I think I already kind of know the answer to this, but I'm still going to ask you anyway. How did your previous profession help you in real estate?
Oh man. I think mainly it's the determination, to move to Nashville was, being that young. I think I don't think I knew what I was really in for, and just the competition and what I was doing. And thankfully at that age, you're kind of just blindly going into something because you're just, eager to give it a shot. And so I loved that I had that risk taking, I guess, mentality. But anyway, so I think going in, just believing that, if I work hard and give it everything I got, and network and meet the right people and find mentors and coaches and people that have gone before me, it's same in music, and creative. It's like aligning yourself with highly skilled people that are better than you, being a team player. I mean, everything I've done in music and audio, it's always been about team. And with what we're talking about with these deals that we're in, it's all team. No one's there's no I, there's nobody individually doing this. So I love that. I love the team aspect of it. So I think it's just motivation, learning, getting under great coaches and mentors that can teach you the way and show you, and partnering with people that are better and have better skills, different skill sets. I wouldn't say better, but just different skill sets that can fill those pieces so we can build great teams and do more great things together. So that's kind of what I'm taking from what I did in music. I'm kind of trying to model, hey, this worked. I was a team player. I've always wanted to never be always the lead guy or the all, the rock star or whatever, but just, hey, finding places in different records or touring to fill a role that was needed and plug that spot, and it always seemed to work. So
I love those answers. And the answer I thought was not said.
Huh.
I thought it was going to be creative, the creative side. And I know we've spoke about that before, but so determination, risk taking, team player, motivation. Or those are the ones I wrote down, but risk taking has been my biggest probably weakness, and a few years ago kind of realized that, and so I started taking a little bit more risk, but still from and you said it, but mentors, right? So I aligned myself with mentors, people more experienced with me, where sure I felt I was still taking a risk, but I had mitigated it as much as possible because I was investing alongside experts.
Right.
And for me, I did a couple passive investments first because I wanted to see how it worked. What the process was, investor communication, all of that, underwriting. And so when I did that, I was like, man, this is great. This is exactly what I want to do.
Yeah.
But I definitely leverage mentors and experienced people by passively investing, and kind of got some of their trade secrets, and it's my money as well, but got some trade secrets from them and able to implement that in my business. The risk taking, so would you say that you've always taken risks?
I think so. I mean, being in music and audio, and it's always kind of been, from job to job, or
Sure.
event to event. And so I think it's, there's faith, obviously, risk, and like you're saying, what your words were awesome, just calculated risks. That's not this wild risks, of putting all the chips in every time or anything.
Right. Yeah.
But I feel like my life has kind of just been, being willing to step out and try new things, or and not just take the safe road of getting the 9 to 5 and just hoping it all works out. But I think the calculated risk taking, and just like you're saying, I mean, finding people that are excellent at what they do, and trying to work with them, partner with them, learn from them. I mean, there's so much online these days. It's amazing.
Yeah.
Events, and going to, sacrificing time maybe at home to spend a weekend in Dallas or another place and go to seminars and learn from the best, always trying to find, people that are great at what they do, and learning from them. That's, to me, is risk in a way, because you're stepping out to do something that might be uncomfortable, but you're willing to give it a shot and jump in all the way,
Right. Yeah, I love that. And nowadays, especially with Zoom being so popular, a lot of the conferences are online, and so you can even dabble your toes, that way, just attending a virtual event and then going in person. In person's always better, I think, just because you get to actually meet people and you get to be there.
Yeah, the one-on-one, the networking is to me, being in the same room and playing off each other and asking questions really helps.
Yeah, for sure. So I know you mentioned the creative side of the hunt. What type of deals are you looking for in apartments right now?
Yeah, I feel like right now, it's the market's it's changing, obviously, and with interest rates, and the buy-ask gap is still there, where sellers want old prices, and buyers want the wants that to obviously close that gap. So right now, I feel like it's the class C plus to B, anywhere, like I said, anywhere in that 100 to 150 unit type deals, light value add, and preferably right now in growth markets, obviously, where jobs growth, where a lot of people are moving to, migration patterns. And so a lot of that's kind of the Nashville MSA to some Georgia, obviously, love Knoxville and Chattanooga. So some of the Tennessee markets. So that's kind of our focus right now.
Very cool. And then, so you're open for other investors as well, for people that want to passively invest. We will pitch the handles in just a minute, but want to talk about maybe a recent book that you've read that stands out to you.
Oh man, I love books. Let's see. Right now, what am I reading? I am reading. Well, I'm actually reading again. I have a Kindle, so I'm always flipping through different books. And my daughter gives me a hard time because I download a lot of samples, and I got all these samples, and she's like, "Do you just read samples?" I'm like, "No. Once I get into it and I really like it, then I go ahead and buy it." But she's like, she thinks I just read samples, on my
That's
Kindle.
awesome.
But I really like the Cardone's real estate book. Grant Cardone has a small but very informative real estate book that I'm really enjoying still, and it's not my first time reading it, so I kind of go back because I like his formulas are really simple. So anybody that's interested in investing, getting in either on the active side or the passive side, I think it's a really good book to read.
Okay.
Grant Cardone's book. I don't even know if it's called. I don't even know what it's called. Sorry, it's his real estate book. It's kind of his main one on real estate investing. So.
Very cool. I actually just bought yesterday the 10X rule.
Oh
I'm
yeah,
a
great.
big Cardone fan. I've not read it. I probably should have read it 5 years ago or more,
Yeah.
but
And then let's see, Michael Blanc's book's great. The Yellow Book.
okay. Very cool.
Those two, yeah.
What can people expect to see from you and your business in the next few years? I know you mentioned earlier you want to get in some more properties. Any other goals?
I think it's right now just adding more assets to the portfolio is kind of a big deal right now, and continue to capital raise. I feel like we did learn from the deal in Georgia that we stopped for a season. Once that deal closed, we kind of stopped for a few months on capital raising, and we kind of learned our lesson that
Yeah.
we need to be doing this all year, and which is great because we're building more relationships. We want more people that haven't done this to come in passively and to educate people on what an awesome alternative investment this is to get into. So
Yeah.
slowly, just educating and capital raising. I'd love to. I feel like I'm really researching the fund model right now. I'm really interested in creating maybe a fund and allowing for the capital raising to continue to go on, to pool that money in and then to have that available quicker so that the funds could be deployed on deals faster. So I'm kind of considering the fund model as well.
That's awesome. Yeah. I've done a little bit of research on the fund. I think
Yeah.
it's something I'd love to do.
Yeah, it's kind of more of a long-term play for me, but
Yeah.
but it's something that just kind of it's in the back of my mind as we continue to meet people and raise capital.
Okay. What are the typical holding periods for your properties?
Well, right now on the Georgia one, it's 5 to 7 years, so that's
Okay.
kind of what our target is. Yeah, so nothing so far shorter than that, and 10 we haven't had anything yet that we've thought about holding 10. So right now it's 5 to 7.
Okay. Very cool.
Yeah.
That's popular. I know. I try to do 3 to 5. Those are hard to find right now.
Yeah.
Um,
Yeah.
And you mentioned some of the reasons with the high interest rates and sellers wanting prices that are ridiculous, but yeah, 3 to 5 and 5 to 7 super popular. And what I actually really like about those time periods too is, some people get into a property and want to sell it immediately, and I've seen 1 and 2 year turnaround times. I'm like, you don't know if you can do that. I mean, look at the interest rates. I don't think many people would have predicted a year ago where rates would be now.
Yeah.
And people aren't paying anywhere close to what they would be worth in probably 2 years. And so I think having a 3 to 5 or 5 to 7 year time frame really gives you a lot more flexibility, where maybe you can complete the business plan today, but rates are still really high. You can still wait. You don't have to sell it.
Right.
So I like that to be more conservative than aggressive. And then hopefully you can over deliver and under promise.
Right.
But I hate for it to be the other way around.
Yeah, and some of these that you're seeing come up, obviously this year is going to be interesting with with the interest rates, and then the operators maybe that did the short-term debt, the bridge lending.
Yep.
It could be in trouble. There could be some distress there on the loan side. So we're obviously looking to help either bring capital into those deals or go ahead and acquire them. So that's kind of another plan for 2023, is looking for those types of properties that might be in trouble.
Yeah, there's going to be a lot out there.
Yeah.
And I guess we won't go into all that. We actually have bridge debt on one of our properties, but we bought a 3-year interest rate cap, and so it's doing well. We've done a good job from the business plan side of things, but the interest payment's a lot higher than what we would like for it to be, obviously.
Sure.
And I know, a few years ago, most people did bridge loans. But I think there's going to be a lot of good deals coming towards the end of this year and next year for sure, of people that have to sell.
Yeah.
All right. So how can people reach out to you if they want to meet a Super Bowl legend or have questions about how they can
Oh
invest with
gosh.
you?
Oh sure. I would love to speak with anybody. I love talking real estate or music or Super Bowl questions. That's fine too. My email is just info is fine. Info at I65, which is the letter I 65 capitalinvestments.com. That's a fine. You can reach me there. Any of the socials, LinkedIn, Brent Barcus, Twitter, at Brent Barcus, Instagram at Brent Barcus. So any of the socials, and then website, which is launching the next week, a new updated website for the I65 capitalinvestments.com.
Awesome.
Letter
Congrats.
I5. Yeah, thanks.
And I'll put those in the show notes.
Okay.
And I know, I think you and I initially connected on LinkedIn. I know you're active on LinkedIn, so I'm not on Twitter on some of the other stuff, but I'll make sure to put the LinkedIn in the show notes there as well.
Yeah.
Awesome. Well, Brent, it's been really amazing talking to you. I know when we spoke before, we had a great conversation. So it's thank you very much for sharing your story and kind of talking about your path into real estate. Really appreciate you being here.
Yeah, absolutely. It's been an honor and a joy, and you're doing great things, and congrats on the podcast, and looking forward to following you on this platform as well.
Sounds good. Thanks.
Yeah.
Have a good day.
All right.
Thank you for listening to today's show, brought to you by H&K Investment Group, your home for passive investing. If you want to learn more about how you can invest with us, please check out our website at hkigllc.com. Don't forget to like this episode and subscribe to our podcast. Please leave us a review to let us know how we are doing. Feel free to connect with me directly on LinkedIn or Facebook. As always, I'm your host, Charlie Hardage. Catch you next time.